This is Matthew Cratter from Bitcoin University, and today I wanted to talk about a Fed bankster meeting a Russian prankster. At first I thought this was a deep fake, Jerome Powell being tricked into a call with Zelenskiy by Russian pranksters, but it looks like the mainstream media at least is confirming that this call in fact took place, and there have been previous calls with the same prank callers. They were able to get Christine Lagarde on the Zoom call or on the phone, as well as Boris Johnson as well. This is one of the problems. Our politicians, our central bankers are much too old. They're much too senile to use modern technology. Did Powell actually take a Zoom call where Zelenskiy had his video turned off, but Powell had his video turned on? It's very strange. Where's the U.S. government and the Federal Reserve? Are they really this incompetent when it comes to security? There are a couple really funny moments. I'm not going to link to the whole video. You can find it on various websites if you look online, but I'm afraid that it might get me into trouble linking it directly. It doesn't seem to be available on YouTube directly. In this video, the prank caller asks Powell if he could give him one of those money printers, that this would really help out with the war. And Powell jokes that we have one of those, but we keep it in the basement. The prank caller also suggests that Powell sets up a branch of the Federal Reserve in Kiev. And you think at this point that Powell would realize that this is really a prank call, but he's just perhaps too into himself to notice that. Powell gets back and says, "We could do that. Let me get back to you on that one." And just this joke about setting up a branch of the Federal Reserve in Kiev, it's a lot less funny when you remember how central banking has spread like a leaked lab virus all over the world over the past couple hundred years. Really, the Bank of England was the first one, and then we had the Bank of France set up by Napoleon in 1800, and then the 1800s and the early 1900s really saw central banking spread everywhere. So whether this is a joke or not, I don't think it's a very funny joke. The other thing that's very interesting about this video, we can see Powell acting like a starstruck schoolgirl meeting Elvis. He repeatedly says, "It's a great honor to speak with you," etc. And he's very good at groveling. You can see why he became a career investment banker and central banker. There are a few interesting economic nuggets I wanted to talk about. Powell is very forthright about what he's trying to do, and he says a recession is almost as likely as very slow growth. It's important to note that this video, it appears, was recorded in January, and that's going to become important. I think a lot of commentators missed out on that. But Powell says that a recession is almost as likely as very slow growth, and that this is what it takes to get inflation down. You need a recession or you need really slow growth. This is another quote: "We need a period of slower growth so that the economy can cool off, so that the labor market can cool off, so that wages can cool off. That's the only way we know to bring inflation down." And he does allude to the fact that a lot depends on what happens in Ukraine and Russia and their energy. It's going to be very, very difficult for the Fed to bring down prices as long as Russian oil is still not being sold to the West. In the call, Powell says that the Fed will hike 2 more times and that is certain. And this is very interesting for 2 reasons. It tells you, first of all, that he was not actually data dependent as he said that he was. He had already made up his mind in January to hike at least 2 times early this year. And he was never that forthright in his testimony to Congress. So if I were a congressman or woman, I would be quite ticked by this, and I would probably want to bring Powell into my office, because you shouldn't be giving this sort of more forthright and honest testimony to foreign leaders than you give to the legislative body in your own country. But he's a central banker. He wants to set up a branch of the Fed in Kiev, so you can't really blame him. And as I said, this call apparently took place in January of this year. So when he talks about hiking 2 more times, we've really had those 2 hikes. We had one on February 1st and one on March 2nd. Now it looks like the Fed futures market is pricing in the probability, a high probability, 88% chance of 25 basis points. In other words, a 1/4 percentage point hike during the May 3rd meeting of this year. The current rate is for Fed funds is 4.75 to 5%, and so this is pricing. You can see an 88% chance that we go to 5 to 5.25%. And then if we take a look at what's happening at the next meeting in June, the market is pricing in a high probability, 64%, that the target rate stays at 5 to 5.25%. So basically pricing in that the Fed is done. There's a small chance that they cut. There's a small chance that they raise rates at that meeting. But this looks like the market, at least at this point, is pricing in that the Fed is done. Now, there's a reason why the Fed cannot continue to hike, and they can never get rates up to 9 or 10%, as some people have been saying, and that's because the total U.S. public debt as a percentage of GDP is still very, very high. It peaked in the second quarter of 2020 at 134%, but it's still, all that inflation we've had over the last couple of years has only brought it down to about 120%. When Paul Volcker was doing his thing in the late 70s and early 80s, debt to GDP in the U.S. was much lower. It was at 35%. And so the problem is, of course, that the Fed, they can't hike rates that much more without blowing things up. They've already blown up the U.S. banking system, as we saw. And here's the real problem. We have the growth in public debt, and we just had looks like the debt ceilings can be raised by $1.5 trillion, depending what happens politically in Washington, D.C. But this is something that will need to happen because the U.S. government is still spending more than it's bringing in. And we can take a look at the rate of growth of total public debt in the U.S. And you can sort of eyeball it. Obviously, moves all over the place. The rate was growing much faster in early 2021. But even looking at these levels, we're still at, call it 6% growth in the debt. And that's compared to, if we're taking a look at trying to think of how this chart can come down, how debt to GDP can come down, if you have debt growing at 6% and you have GDP growing at 1%, which was the most recent number, this is very, very difficult. You basically have debt growing faster than the economy. And the way you get out of this is you either have very high inflation or you have real economic growth that's caused by technology and doing more with less. But we seem to be on that path where a lot of politicians and a lot of bankers seem to want people to accept that they're poor. This was a story about the Bank of England economists saying that people need to accept that they're poorer. The problem with this, of course, is that as people get poorer, they pay fewer taxes. When they don't have capital gains in the stock market or the real estate market, then the tax revenues go down and the government has to borrow even more money. This increases debt, and this ultimately drives up this ratio of U.S. public debt or U.K. public debt to GDP. So these central banks are really between a rock and a hard place. And what has happened since Jerome Powell was tricked on this prank call was that the U.S. banking system, especially regional banks, has completely imploded. People have moved into treasuries. They've moved out of these smaller banks. Silicon Valley Bank was taken out, Signature Bank, and a few other banks. So this is something that happened. If Jerome's call happened in sometime in January, this is what's really changed since then. And so the Fed is basically hiked to the point that's blown up the U.S. banking system. They've had to come out with their new policy on March 12th, what they call the Bank Term Funding Program, where basically they destroyed the value of all these treasuries on bank balance sheets, but now they're going to let banks borrow against them at par. It looks to me like the Fed is done, and I would say that the best liquidity indicator that we have out there really is Bitcoin, which bottomed when FTX blew up in November and has been slowly grinding higher. This suggests that liquidity is coming back and that Fed easing or at least staying at these levels is what we should expect. And I think the market is picking up on the fact that the Fed can't really hike anymore without causing something to go completely wrong. So they're between a rock and a hard place. If they hike more to try to get inflation under control, they risk blowing things up more because the economy is so levered, it's so financialized, especially in the U.S. But if they stop hiking and if they cut rates, then you're basically pouring gasoline on the fire. And we're going to see very, very high inflation, especially if the war in Ukraine and Russia is still going on and that Russian oil is offline and not being sold to Europe. Then we're really going to see high inflation, sort of high structural inflation driven by energy costs continue. And there's nothing the Fed can do about it. And this is the problem that you encounter when you have very high debt to GDP levels, as most developed countries have now. I think ultimately the Fed will need to turn the money printers back on, as the fake Zelenskiy said in that video. And I think, as I said, the market is already sniffing out that this pivot has already happened, and that what's priced in is priced in. The Fed is done raising rates after May. And if we were to get a high inflation print, we would risk the Fed perhaps trying to get more aggressive again, and then we would see more banking collapses probably. We're already having a very rapidly slowing real estate market in the U.S., and a lot of these regional banks are the main lenders to real estate. The Fed, by blowing up these regional banks, has really taken out a major lender to a lot of real estate markets all across the country, and this will make the economy continue to slow. So I think the Fed is basically done, but they are quite hard to predict, especially when you have a guy like this who spends part of his schedule doing phone calls with Russian pranksters. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video, and let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.